Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. This is a Kickstart video. Today's date is March 5th, 2024. In the Kickstart video, I take a look at three of the major currency pairs, the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar. So let's get started. I'm going to look at the euro versus US dollar on the 4-hour chart. And what we saw in trading yesterday was the price moved above the 38.2% retracement. That's of the move down from this high going back to December to the low price that we saw in February. 38.2 comes in at 1.0864. And recall from last week, the price moved above that 38.2% retracement on our way to 1.0887, but failed quickly and then reestablished resistance against the 38.2. And in trading last week, we went up to that level, found willing sellers. And in trading yesterday, we went up to that level and also found willing sellers. The price has moved off of that level, currently trades at 1.0841. The good news is that the range today is only about 16 pips. That's it for the euro versus US dollar. So it's not like the price is falling off a cliff here, but it certainly is a little worry to me that the price can't get above that 38.2% retracement with any sort of momentum. So the buyers aren't saying, I love this euro. In fact, they're saying, well, there's a limit to the upside here for this pair. We saw it last week. We saw it again here today. Now, having said that, the good news for the buyers is that the price is above these moving averages. This green line represents the 200-day moving average. That's a key moving average. This blue line represents the 100-day moving average. That's a key moving average. And this other green line represents a 200-bar moving average on the 4-hour chart. And that's another key area, as is the 100-bar moving average. So in between 1.0801 and 1.0827, there's this cluster of moving averages. Nevertheless, if the sellers are going to take more control, they need to get below one, and then the other, and then the other, and then the other. And if they can do that, that would increase the bearish bias and now have sellers looking more toward our low prices through here on the downside. Until then, however, the battle is on between the 38.2% retracement and this cluster of moving averages, and that's what we're going to have to deal with in trading here today, even with a 16 pip trading range, which is not a lot of movement. Let's take a look at the dollar versus yen next, and look at the 4-hour chart. And what we see on this 4-hour chart is that recent highs have been lower, okay? And that comes after we formed this ceiling here near the 150.87 level. We had a high there which was at the 87 level. Then we came up to this high in here and high right here. And we couldn't get above that 150.87 level and target the 2023 high prices near 151.90. So we did see the sellers push the price down through here and then rebounded back into this area up here before rotating to the downside. And as you can see, we're now trying to trade below the 100-bar moving average on the 4-hour chart at 150.23 and start to enter into this swing area between 149.70 and 150.15.8 or 16. If we can break below we're going to need to break below all that area right through here to increase the bearish bias. But the first step is to get and stay below the 100-bar moving average on the 4-hour chart at 150.23. Also in play, if I go to the hourly chart for this currency pair and take a look at these two moving averages, this is a 200-hour moving average and the 100-hour moving average. And as you can see, the price in trading yesterday moved above that level and then held support. We held support in the Asian session. We held support in the European session through here. And in the U.S. early hours of trading, we fell below that 100-hour moving average. So that pushes the bias more to the downside at 150.29 and 150.39. So for traders who are looking for a lower dollar and want to give yourself a little bit more room compared to that 100-bar moving average on the 4-hour chart, this is your risk defining level, your bias defining level. Stay below those levels. It keeps the bears more in control in the short term, and we'll look to get below this swing area down to 149.70. Maybe we'll look down toward the 38.2% retracement at 140.96. That's a progression. If we move back above the 100 and 200-hour moving average, all bets are off. The sellers had their shot. They missed. Let's take a look at the sterling versus US dollar last. And if we look at this pair and draw our traditional box around the 125.94 up to 128-ish type area, most of the price action over the last 1, 2, 3, 4, 5 weeks have been below the 61.8% retracement. In fact, the high price yesterday came right up to that level, which was the high price from last week near the 127.09 level, and found willing sellers. We are trying to hold support against a 50% retracement in our very narrow trading range and trading here today. We're going to need to get below that 50% retracement. That's of this, just this the range through here. So it's not a huge range, but get below 126.72 to increase the bearish bias, and then we need to get below the 200 and 100 bar moving averages on a 4-hour chart. That they come at 126.52 and 126.35 respectively. Ultimately, if the sellers are going to take control, we need to get below the 125.94 level last week. Toward the end of the week, the market came down toward that level, found support buyers, and pushed back to the upside. So it held its it did its job against that swing area through here, and that is kept the buyers in play. But there is a limit to the upside as well in the sterling versus US dollar. So the battle is on, but sellers against a 127.09 level, buyers against a 126.52 and 36 level. We'll see how it all plays out going forward, but that's what we have to look forward to in trading today and this week. So there you have it, a Kickstart video for a look at the 3 major currency pairs. My name is Greg Michalowski for ForexLive.com. Good fortune with your trading. Bye-bye now.